Welcome back. You're watching Startup Street. Now, debt and equity investment firm Anicut Capital recently received market regulator SEBI's nod for a 1,500 crore rupee debt fund to invest in startups. Now, this is Anicut's third debt fund, which is called Grand Anicut Fund 4, and includes a green shoe option of 500 crore rupees. It plans to launch the fund in the Jan to March quarter of 2023 and announce the first close in the same quarter as well. To talk about this fund and its investment plans, I have with me IAS Balamurugan, who is the managing partner at Anicut Capital. Bala, thank you very much for your time and for joining us here on Startup Street. You know, now that you have SEBI's nod for this third debt fund that you plan to launch, tell us what sort of opportunities you see for investment on the debt side and what sort of portfolio growth are you targeting?
Okay, great. So I think good evening, Ritu. Nice to have me on this show. So I think we just received it about a week back. I think this is our third debt fund offering from the platform. The first two funds, I think we had close to about 1,300 crores both put together, and we had the ability to recycle, which means like we had recycled at least once. So we have already had exposure of about 2,500 crores in dealing with debt. If I have to take back the experience of Fund 1 and Fund 2, it has been predominantly on consumer companies. We had very little bit on the debt, consumer companies, pharma, formulation companies, and stuff like that. So I think, we don't feel any need to change that strategy. I'm sure, I think the time is good enough. Time is great for doing debt deals because I think there's not much of equity money coming in. The people who are starved for capital, and this is the right time to put a little bit of debt where people have raised a lot of equity. It can create additional runway, it can create new businesses. It can help people to acquire businesses. I think we think it's a good time to be launching our third debt fund, and that's how we are. So I think.
Well, Bala, we'll get to the equity. Well, we'll get to the debt versus equity debate in just a bit. But first, you named some of the sectors that you're keen on investing in: consumer, pharma. But are there any others you've identified, and will they be from Anicut's existing portfolio? Would you be looking at other companies, and what kind of average ticket size for investment are you looking at?
Okay, great. So I think we are sector agnostic. We don't do real estate, and we are open to do business with anyone other than real estate because that's how the mandate is. So I think more. I said consumer and pharma more as examples of it. Ticket sizes, I think we are good to go anywhere between 10 to 12 million. I think let me put it this way, like 7,500 crores, and maybe a stretch by under 10-15 crores is what our ideal ticket size is. So that's that's what we are looking at. We are probably wanting to write about 10 to 15 to 20 deals in the fund in the next 2 years. And we have already have like 2-3 term sheets out, and we are hoping that I think once we launch the fund, which I think in the first week of Jan, we would have about at least like 1/3 of what we are aiming at to get closed in the first 3 months of our launch, and we will also have simultaneously deployed also.
All right.
So that's what.
All right. So we'll see you sign the first deal very, very soon, within a month's time. But, back to that debate about venture debt capital versus equity. And, it's interesting because a lot of founders are now opting for debt because they have to dilute, less equity, valuations aren't the most attractive. There's a bit of a drought in the IPO market as well. Like you said, it provides some sort of a runway before they have to raise equity capital. But can debt really substitute the equity requirement for these startups?
Okay, so it can never ever substitute, that's for sure. But what it can do is that I think it can improve the runway. Obviously, I think it can have a good capital mix. I think there's a good old saying of you build a business with a good capitalization of debt and equity, so that I think you are taking care of your own shareholders' interest, I think, which is in this case not only founders' interest, also the investors, the equity share investors' interest. I just want to tell you one thing. Market always provide opportunities for debt. We always have events playing out. It could be COVID. It could be now, I think the funding, so-called funding winter. It always keeps coming. So it's always a starved capital market in India. We have been in business for 7-8 years. We never had a time where we said, I think we are out of business. Okay, so you're always in business. So I think maybe the situations change.
So debt is
here to stay for a long time.
Yeah, debt is always the flavor of this season. It is. Well, on the equity side, if you could give us an update about the Opportunities Fund, what is the corpus, and how much have you committed so far?
Okay, so I think what we are looking at there is about 500 crores, and we have a green shoe option of 250. We have closed about half of it has already raised, and we have committed on 5 deals. And probably 2 more commitments are being made in the next I think 30 days. We are doing the diligence on it, which means I guess half the portfolio would have been constructed by the Jan end. So Opportunities Fund, I think you would have figured out by now. The companies which we have dealt in the past, either in the debt portfolio or in our angel portfolio, where we have a track record of dealing with that businesses, also with those founders. But we are expecting, I think, external investors to come and validate, and then we join them. Not necessarily we will lead in all those opportunities. Yeah.
Quickly, we've run out of time. You've had some great investments in the past, from Wow Momos to Bira, Sugar, Cosmetics, and whatnot. If I were to ask you in one word, what is the next big bet you're looking at making?
Next big, I think, I think see every investment you think it's going to be big, okay. But I think I would like to bet on one thing, which is which is a good engineering services company out of Chennai. I think it could be the next big thing in our portfolio. I think that's, again, it's a very biased bet. I think having been out, it's more closer to the heart. I think that's how. But I think I would want everyone to succeed and everyone to be becoming big. And all our bets turned out to be big. I think you would know. I think it's not going to be true. But I think I'm sure we need to keep dreaming and on our bets. That's how it is.
Sure. Bala, on that note, it's been a pleasure chatting with you. But we've run out of time here on Startup Streets. Thank you very much for joining in. And on that note, I'm going to wrap up and thank all our viewers for being here. But stay with CNBC-TV18, the news continues.